I'm here today with some great news for clients of KeyStone. A top-rated stock in our coverage universe, XPEL Inc., symbol XPEL on the NASDAQ, in both our Canadian and US growth stock research, jumped over 25% yesterday and is now up over 500% since we recommended it just less than 2 years ago. Why? The stock reported strong second quarter numbers yesterday, including a resumption of revenue growth and further margin improvement, which led to healthy jumps in profitability. But unless you're a client or have attended one of our DIY seminars over the last year and a half, you've likely never heard of this stock. Why, you ask? Let me let you in on a little secret on both Bay and Wall Street. Particularly in Canada, big banks and big brokers' coverage on stock buy recommendations come from a select group of stocks that pay these big financial institutions to conduct investment banking for them, stock or equity and debt financings. This is how the big financial institutions make their money, not by painstakingly researching winning stocks to recommend to you. In fact, if the company does not need much capital, like XPEL, often they do not even cover stocks like this. So why bother? Why would they bother? Trust me, finding these type of stocks is very hard work. You literally have to go through every stock on both the Toronto Stock Exchange and TSX Venture by hand. Screen for profitability, read the financial statements, check out the outlooks on each company, interview management teams which fall within a growth at a reasonable price framework. All of that just to find 1 to 10 stocks each year. At KeyStone, we do this exercise twice a year. Go through the financial statements of every stock on the TSX and TSX Venture to find a select group of profitable businesses that match our criteria, as XPEL Inc. did. At KeyStone, we do not conduct financing for these companies, so we don't really care if they need capital or not. In fact, we often prefer they are generating internal cash flow to grow, just like XPEL. Our singular goal is to find the best investment ideas for our individual investor clients. We have just completed another full analysis of the over 3,500 plus stocks in Canada and released 2 unique reports, both to our Canadian growth stock or small cap research clients and to our Canadian income or dividend stock research clients. We issued 4 new buy recommendations in our Canadian growth stock research in a special report this week, and recently released a special report on the 8 best Canadian dividend growth stocks for your portfolio. Become a client today and simply get access to these new recommendations, which just might include the next XPEL Inc. Make no mistake about it, a stock that gains over 500% in less than 2 years has a place in any portfolio. You would not have found this recommendation through your big bank advisor. Only through KeyStone could you have received not 1, but 4 separate buy recommendations over the past 2 years on this stock. Again, congratulations to all clients and shareholders of XPEL following the strong gains once again this week and over the past 2 years. Reviewing the results on this company recently, we still continue to expect good growth going forward. Thank you and profitable investing.